Research shows that 12 commercial banks have recorded profit after tax, that's PAT, of about 366 billion naira in the first 6 months of 2017.
Now, although their profits were affected by huge impairment charges, the amount is an improvement of 77 billion naira, which is higher than 290 billion naira booked by commercial banks in the corresponding period of 2016. Although this is a welcome development in the banking sector, not a few persons have accused the banks of profiteering at the expense of their customers.
Yes, indeed. Now, they say banks make a huge income from fees they charge customers for use of their various electronic banking services, principally transaction alerts, automatic teller machine, that's ATM services, money transfers, among others. Organized labor has declared the electronic transaction charges as not only outrageous, but also corporate extortion, pleading with the Central Bank of Nigeria, the CBN, and other regulatory agencies in the financial sector to intervene before it gets out of hand.
So the big question is, are commercial banks ripping off their customers to make huge profits? Or is this something we should be celebrating as a welcome development in the banking sector? We have a tax expert, Dr. Chris David, in the studio. He's a futurist as well, to talk to us more about this. Good morning to you and thank you for joining us.
Morning.
Good morning for having me.
Yes, and can we say that, yes, we can take this to the banks, really, that the profit after tax declared by 12 banks is quite, were made legally?
Well, my answer to that is yes, that those profits were earned legally. But what impact does that profit, all those profits have in the entire economy? That should be the context at which we should be discussing this issue. Now, I would say that Nigeria is in a recession.
We're out of it now.
Out of it now, officially.
Yeah, that is what the
At least
narrative
officially.
says. And okay, that reminds me that we should actually look at the two definitions of what recession actually means. There is this textbook definition or the theoretical definition of what a recession is. And they tell you that when you have negative growth in GDP for 2 consecutive periods, then you are in a recession. But technically or practically speaking, recession in Nigeria simply means there is practical hunger in the land. So the other time, the Minister of Finance says that Nigeria is technically in a recession. But we move from technically being in recession to practical hunger. The current narrative is now saying that Nigeria is out of recession. So we also can
Are we
also
out
say
of technical recession?
technically out of recession, but not
out.
practically out of hunger.
Okay.
Now, that brings to bear the question that does GDP really is a good parameter to measure the well-being of people in a country? The answer is no, because you just have a few sector producing, and that translates to positive growth in the GDP, just like what we have in the banks. Now, what we have in the bank sector, not in the banking sector, not just because of this profit that has been declared, over time, our financial services institutions or sector have not been well defined. And you keep on hearing people talking about there is no alignment between the fiscal policy and the monetary policy in Nigeria. So you have a situation whereby because of this imbalance, some sectors actually prove to be performing well, but it does not rub up on the entire economy.
Isn't that contradictory in terms? Because she just asked you, you know, are these profits declared by the banks legal? And your response was, yes, they are legal. And the question, but from your explanation, you're saying that in spite of the profits that the banks have been able to record over time, first half of 2017, yes, it's not rubbed off on the lives of Nigerians. And Nigerians have been complaining about hidden charges, electronic banking, all kinds of things. The SMEs will tell you banks are not lending to SMEs, they're not lending to startups. And these are the larger percentage of the Nigerian population. If they're not benefiting from whatever services the banks have to offer, where are the banks making this money from? And how come the banks are so immune to recession that you could actually say the Nigerian banks are actually strong?
So that is a question of what are the relevant policies and regulations. Because banks charge all these fees and other charges based on a regulation from the CBN. So if the policies and regulations are wrong, you cannot blame the banks for charging those. In fact, the banks will even tell you that recently those charges were dropped or were reduced, but they are posting this kind of profit. So the question or the issue, what we should be considering here is, what are the regulations, what are the policy guiding the operation of this bank? Are these policies geared towards economic growth or economic development? Because there is difference between economic growth and economic development. You might have a growth that will not translate into development. Now, let's look at the banks in context and let's make some comparison. If you take out the sources of income or the component of income that banks report in their financial statement, you can categorize them into two. You have the interest income and the non-interest income. Now, the interest income is an indication that the banks are creating wealth through funding productive activities. That is, when they lend to, like the SME and all that you mentioned. So they're actually being productive when they lend. But the non-interest income, those are the things they refer to, the income earned from non-core banking activities. So you talk about those ATM charges and all that. Now, if you look at other climes, the UK, for example, you pick up the financial statement of a bank, you see the proportion between the interest income and the non-interest income is usually between 95 and 5%, while 90 to 10%. So what that means is that in those parts of the world or in the UK, they do more of lending.
Which is the core
core banking, the activities that banks are supposed to engage in. So when you do more of lending, what you are doing is that you're actually creating economic activities which will result to employment, to reduce your inflation and even your exchange rate. But in Nigeria, what we've seen is that when you pick up a financial statement of a bank, the proportion between the interest income and the non-interest income is usually between 60-40 or 70-30%. So what that means is that we are not doing enough to actually lend to the real sector so that that aspect of the economy can develop and we cannot have employment and all other things that will come with economic growth. Now,
well, before you go for that, can we say this is one of the reasons why the ratio of non-performing loans, for example, last year is quite high for the banks, and most of the time they would have to inject this into their profit and then maybe write it back if they are able to recoup the money?
Again, that is a function of wrong policies. Now, the first thing you look at, what is the interest rate? The interest rate in Nigeria is very high. Now, when you have high interest rate in an economy,
14%,
that is the monetary policy.
Yes.
But the average loan out there is between 21 and 27%. Now, what that does to an economy is that it translate or move money or transfer profits from the rich sector to the banks, who are expected or who are supposed to just be intermediaries. So that's why they are posting those kind of profit. Now, looking at the negative impact of high interest rate, because I think a few weeks ago, there was a meeting, a policy meeting, and they were supposed to discuss on how to reduce interest. And they came up with the conclusion that interest cannot be reduced. For me, I think that is being naive, because we are not looking at the long-term
What's
projection.
the reason they are giving for not for?
Well, they tell you
remaining?
that cost of funds, is high. But I can also say that that is not actually correct, because if you want to place your money today, the highest you can get is between 6% and 10% if you want to place money. But when they want to lend to you, they lend to you at the rate of what, 21 or 27%, as the case may be, even 30-something%. So the thing is that policies, our policies in Nigeria are not right. And the blame goes to this CBN. The CBN.
Is it because the regulators, the CBN, for example, the banks are going by the books and not necessarily the peculiarity of the Nigerian environment in such a way that their policies can reflect the facts or the reality or the truth about, you know, what obtains in Nigeria now? Is that where we're getting it wrong in terms of actually manning the economy?
Now, what should the usual challenge or the shortcomings I've seen in our policy design and mix in Nigeria is that we don't think long term. Our policies usually span just short term, and it's because some people just want to score cheap mark, whether as politicians or people placed in or place of authority, or to take like the CBN. What we should be doing as a nation is to have strategic long-term plans. For example, if a government comes and says that the interest rate that we should be having should be single digit. So you map out what are the steps that will make you to achieve those single digit. You don't see that. You just see that people gather in the monetary policy meeting after reading papers, and they come out and tell you
and
that.
You wonder really in whose interest is all of this, because we recall that customer deposits reduced drastically in almost all the banks, and they recorded that, yet they are declaring profits. And then, of course, some of the policies, like you just said now, they give out loans at high interest rates, but yet somehow these banks have been able to survive, though the sector was in full-blown disaster just last year.
Exactly. If you take 2015, for example, where the banks actually lost some 2 trillion naira with the downturn in the oil and gas, the global oil market.
And then the Etisalat problem just recently.
Exactly. And then you have the TSA, government pulled out its money, which was a source of cheap funds, for the banks. All of that in the mix, and yet this banks, and of course, really, non-performing loans that you just referred to.
In whose interest, really?
So that means all of this combined did not cause any dent at all in the banking sector, not talk of their profit.
Well, what I would say is that the people in the banks are also smart businessmen. Now, what you need to look at is, early this year, what was the rates, the exchange rates? We had the exchange rate hitting 520. Now, you ask yourself, at what rate was CBN selling this dollar to this bank? And what was the rate this bank were also selling out? So you see that there is a huge margin.
To the parallel market.
Both in the parallel market and even in the banks. So that brings us back to policy and regulation. Because when you just issue policies, you don't monitor the impact of those policies, you get this kind of results that we are getting. But the issue here is, what is the impact in the economy, because we are going to go through this cycle, and the banks will keep declaring profits, and when there is a little shock, they will be the first to sack their employees.
Which they did.
Yes.
They did really.
So,
about 8,663 employees were sacked.
Yeah, because they have to be, they also have to be in business. So what is important here is that what is the long-term strategy of the government of today?
So how will the economic recovery growth plan of the federal government help the banks to be more competitive and transparent in their operations that would benefit, of course, the economy, like you said, to develop, not to just grow now and then have rub-off on the people?
So they have to look at things holistically. Now, what I've also observed in government or from our policymakers is that we have a linear thinking approach to doing things in Nigeria. What that means is that people just sit down and say, okay, we have X number of depositors. By the time you charge 50 naira multiplied by days, you have this X number of billions. And they will clap for you that you've performed. That is a linear way of thinking. What we should be looking at is systems thinking approach to doing our, carrying out both policies and businesses in Nigeria. What does system thinking mean? You look at what is the global or the ultimate objective. Now, we said economies are being measured by GDP, and GDP does not truly reflect the well-being of citizens. So what are the real indices that the government of a nation should be looking at?
Give us an idea.
First is your interest rate. Second, you talk about your exchange rate. You talk about your inflation rate, and you talk about your unemployment rate. Now, if you have a target, or you set a target that, okay, my interest rate is going to be X amount, exchange rate X amount,
and the
inflation rate
has not been harmonized yet.
Yes.
And that is quite a problem, really.
Yes. Right? So, by the time you design your policies to drive these key 4 parameters, not chasing GDP, because I liken GDP to a farmer who brags about the expanse of acres or lands that he owns or controls, yet his family is in hunger. He can't feed his family. So let's look at strategic policies towards interest, exchange, inflation, and unemployment.
Okay, to what extent is the CBN's interventions in the forex market strategic? How strategic is it?
Unfortunately, thank you very much, Dr. Chris David, for coming to the studio. Apologies, just had to stop you.
Thank you so much.